As they said, 90% of traders or investors lose their money in the stock market. Of course, markets and traders have differences, and it's often difficult to some traders into one. However, many statistics and research show that many are really losing money or quitting just in 1 to 2 years of entering the investing game. We have to highlight investing because some will try to enter with the mindset of a gambler. As a beginner, note that investing and gambling should be different, and your choices and actions will prove if you followed either one of these. You could be thinking of doubling your money or becoming a millionaire by investing in cryptocurrencies or stocks. You could have already read books and joined courses for you to have a start. Maybe your friends told you that they doubled their money in just 1 week. However, let's be truthful and frank here. Did they tell you how they did it? Or have they informed you or given you the procedures or manuals to be a millionaire by stock investing or using crypto to double your money? What I mean here are the exact details and steps, how they did it to be successful in the stock market or by investing in those cryptocurrencies. Let's be truthful here, and before you even think of investing your hard-earned cash, I ask you to join me as we go over the facts that you should know before you even part with your hard-earned money. These are brutal facts, and it's up to you to decide if you will start now. Please kindly click the like and subscribe button also if you think the following are helpful. Number 1. Are you ready to lose your money? Be prepared. My brother tried Forex before, but after walking for about 25 to 30 minutes with his wife, when he started, he lost all of his money. This is long time ago, and he said to never invest the same way. What most people don't tell you is that you can lose all of your money, or you could even be in debt once your investment went downhill. If you have checked those millionaires who invested in stocks and cryptocurrencies, you could see that they even posted losing 5 million or more when the market entered the red line. This is not to say that you should never invest, but be ready to have enough funds to cover your investments. When it comes to being prepared, the money you will be using for your investments should be an amount you will not be needing for the next 5 years. This means you already prepared for the rainy season, like about 6 months or more of emergency funds in case you lose your job or times became harder. Your rainy season fund should be able to cover your basic needs at that time. Aside from this fund, you're able to provide for your monthly or yearly budget for yourself and family already. In case you lose all your money in your investments, you or your family will not be in a tough position. This is especially true now, since there's the effect of the pandemic, and inflation is also eating at the value of our money. Number 2. High interest debt should have been paid. If you have payments still in line for 3 to 5 credit cards, this is not the time to start stock investing if you can't even pay this up. If you have other high interest debts like mortgage or others, and you are often behind in your payments, you have to think twice before entering the world of stock and crypto investing. We all know that financial matters could destroy relationships, even to your own brothers, sisters, wife, husband, friends, or your mom and dad. This is to prevent you from taking more and more debts while being unable to pay, since the stock or crypto investing game is not a paradise. It doesn't care if that money you will invest is your saving for a lifetime or should have been used as your emergency fund. It doesn't really care. You win or lose money, the market goes on. Number 3. Investing account activation or deposit is just the beginning. You may think that, wow, so I can start investing with $50 or $5,000. thinking that this is good for you. You started without even doing your homework. Once you start and you deposited money in your account, you actually have to constantly fund that. If your lifetime saving is $5,000, that's not enough to cover for the additional funds that you have to pour in your investments. Even if you gave $500,000, once the loss cut it, your only investment value could be at $250,000 at the moment. It's just an example, and reality could be even worse. So when you think of investing in stock or cryptocurrencies, etc., you have to understand that you will be pouring your money in your account every now and then. Number 4. Beware of churning. What happens here is that if you're a beginner in investing in stocks, bonds, and more, without any knowledge of businesses and finance complex terms, you have to rely on a professional stockbroker. They are well informed and they know what they are doing in the stock market. There are many changes happening now, but let's return to the example. Since the broker earns commissions, if your account constantly buys and sells, he, she, or it may continue doing this without thinking of the impact to you. Your investment can win or lose greatly, but they will not be affected since they received their money when you did those transactions. You may cry and curse if you want to, but that's it when you no longer have the money in your account. This is a truth and you should know about it, so do your homework before investing. Number 5. Prevent margin call. There are terms like use margin, free margin, and liquidation of your assets included in this term. As a new trader, you could be so excited or lack the necessary knowledge to continue your investment with sound choices. You could be leveraging so much and holding to losing investments for a long time, hoping that better days will come. A time will arrive when there are no more available funds in your account, and your broker has to notify you. This is called the margin call, and it often comes via text, email, or banner in the website of your broker. Be careful with this since brokers now can lend funds to you, while your investments or securities will be the collateral. It's like a very good option for you as a trader, so that you can invest even if you don't have the amount yet. But, as I said, the investing or trading game is not a paradise. Brokerage firms have their policies on this, and they don't want to absorb more losses. Once your account is on the losing side, this means they could liquidate your assets without notice to meet your debt. Some would wait for you to deposit more fund or increase your securities. But if they determine that you are not worth the risk, your investments will be done for. It's also hard for them to carry the obligation of collecting debt from you, so liquidation of your assets is easier for them. If you don't want this to happen, you have to deposit more funds or get more securities. That's why it's important that before investing, you have to know number 1 to 4 in this video. Now, this won't be complete without the following. Number 6, do your own research and don't always follow the crowd. Let's get real. Even in stock or crypto investing, you and your friend have different financial status, preferences, and more. It's not because Tesla, Amazon, Bitcoin, Ethereum, Google, or Netflix are good choices for them. It will be good for you too. You have your own financial goals and plans, and your investing strategies must follow with this. Those who know how to check the value and growth of companies, or know how to read financial statements, cash flows, etc., can choose riskier investments, depending on the conclusion after gaining more information about the companies. As a beginner, and if you don't know much about business, finances, or the complex details of companies and trading, you have to choose investments that will lessen your risk to prevent money losses or debts along the way. Also, do your own homework to research more before diving into this money game of stocks and cryptocurrency investing. Creative investing is also becoming common, but always learn about the basics first to prevent any regrets when you already got into the game and it's harder to exit. Note also that there are hidden fees in some cases that are not being shown to you. I hope these short reminders and tips give you bits of ideas for your next moves. If this video is helpful, please like, share, and subscribe to receive more updates when the next videos will be released. See you soon!